All right, welcome back to the Daily Market Recap for Wednesday, July 30th. Hope everyone survived FOMC meeting. We got a little bit of volatility, but basically closed flat. In this video, we'll be taking a look at the action of the indexes, liquid leaders, industry ETFs, and then end the video with actionable long and short setups going into tomorrow. So jumping right into it, yesterday we had a pretty ugly reversal on the NASDAQ and some of the growth names. We had additional volatility today getting into the FOMC meeting, a late day sell off, and then a bounce into the close. After the close, we got some rock solid earnings reports. Meta at new highs, Microsoft at new highs, Carvana at new highs, Robinhood still holding up. So indexes after hours are trading basically at new all-time highs. And after a kind of reversal, shakeout, and then gap up, I think we could be seeing just another leg up because when we take a look at the NAIM exposure index, not everyone is in the market. That's sitting at like 81% right now. The leaders are still holding up great, which we'll cover in a second, and a gap up tomorrow. We'll watch to see if we get similar action to what we had yesterday, where we gapped up on good news and then sold off. If that happens, then yeah, this is a sign that the market's a little exhausted. But if we can gap and either just hold the open or accelerate higher, I think we're going to get into that kind of FOMO type rally, blow off top action, and then we'll set up again after that. But S&P 500, a little bit weaker, down 0.1%, shook out the 10-day moving average, closed relatively flat on the day. That's also trading near highs now. The growth stocks of the Russell 2000, that's IWO, sorry about that. That's IWO, continues to bounce back and forth between resistance gap and support gap. The direction that we close out of will be very telling to where this trend is going to continue. Continue to the upside or reverse to the downside. Just looking for a close over the resistance gap to get it going to the upside. Close under the support gap under the 20-day EMA would signal more of a risk off environment. ARKK, a little bit of weakness today, closed, today's strength, weakness yesterday. We had that resistance gap overhead. And then today we closed basically at the 10-day moving average after an ugly candle like yesterday and then a doji candle here. Breaking through to the high and really closing this resistance gap as soon as possible would be ideal here. And then taking a look at IBIT for Bitcoin, another shakeout to the 20-day EMA, and then closing a little bit higher. Just looking for a breakthrough today's high as an ad spot for Bitcoin position or those type of names, crypto type names to get going again. Taking a look at the leaders, I did make one change. I kicked out RCL, Royal Caribbean. As you can see, this chart gap down on earnings did respond relatively well to those earnings after the gap down, but anything below the 20-day moving average is a little bit of a warning sign for me right now because the market is so strong. So there's no reason to keep stocks like that. And there's a couple stocks that are right on that area. We'll just jump into that. FUTU, another gap down. This is the first test of the 20-day moving average after the breakout into new highs. So that's kind of a good risk reward spot. We'll be covering that a little bit more in the long setups. But if we follow through to the downside and lose the 20-day moving average, this stock won't be on the leaders list. The other one is Coinbase. They report, I believe, tomorrow after the close, also sitting on the 20-day moving average. If it wasn't for earnings, this would be a good risk reward spot that I would be trying to play. But with earnings tomorrow, we'll just see how that shakes out. So had to replace RCL, went with a old liquid leader, Palantir, trading really tight above the key moving averages, made a new high after I think we kicked it off the list on this day on the 27th. And since then, it's been acting great, right? We had a couple of chop days, eventually popped through the 5, 10, 20-day moving average and has been in an uptrend ever since. Now we're starting to see volatility really tighten up. From there, from contraction, we see expansion. We'll see if it's to the upside or to the downside, but we can watch that 10-day moving average and support gap there. Rocket Lab, big winner today. Another kind of test of the 20-day moving average, high or low. Close up 6.1%. Great action overall. Whenever a stock retests the 20-day moving average, that's typically a good risk reward spot if it's going to be a leader that continues in the trend. Roblox, awesome action before earnings. They report before the market opens tomorrow, but super strong action today, up 5.6%, closes over the resistance gap off the highs, and we'll see how earnings comes out. GEV continues to act really strong since earnings, up 3.6% with another gap up. Open on the low, closed right near the high. Any market pullback and coming, and if this comes into the HBC, into the 10-day moving average, that's a spot that I'll be watching. SMR, really tight action today over the 5-day moving average. A little bit more volume, which isn't ideal on kind of a chop day, but still think that this is a quality setup for tomorrow that we'll be covering. Robinhood, good action. Closed into the 10-day moving average on yesterday's little sell-off. Slight gap up today, and then on earnings, it's like at 108.20. That's on the watch list as well tomorrow. NVDA, higher highs, higher lows, another gap up. Really just straight off the bottom, massive move from April 7th low, and it doesn't look to be doing anything wrong. All those gap ups show institutional accumulation the entire way up. I've never seen a stock with this many subtle gap ups, and that's why it's the king of the market. Then we covered Coin, Palantir, and FUTU. So jumping into the ETF list, semiconductors continues to be the leading theme at this point, up another 1.1%, closing at new all-time highs, closing wise. Uh, XBI Biotech ETF continues to chop between that 20-day EMA and the support gap, a little bit weaker close today. A lot of the ETFs were actually weak today while the leaders were strong, which to me is positive action overall. Uh, the blockchain ETF, right at the 20-day EMA and support gap. That's a do or die spot for me. So um, I don't typically trade like ETFs by themselves. I try to trade the leaders within the ETFs, but this is a really good risk reward spot for the group. NLR, the nuclear theme, just down to the 10-day EMA and support gap right here. Did close slightly under that, but as long as we hold the 20-day moving average and the higher low on the pullback, I think it's fine. XLF, financial ETF, bounced at the 20-day moving average and support gap. We can see a gap up and accelerated move from here. I really like this base, quality base with plenty of shakeouts on the right-hand side. So a gap and go could really ignite this move. And then I wanted to talk about cybersecurity, a gap down, undercut for the 50-day moving average and support gap, closed back above that. A lot of the stocks in the cybersecurity space, CrowdStrike, ZS, both at the 50-day moving averages, so good risk reward spots there. If the rally is going to continue, I don't see cybersecurity breaking down, so this could be the higher low in the pullback structure at the 10-day or 10-week moving average, 50-day moving average, and then a good risk reward spot to the upside there. And then if we lose today's low, chances are this is rolling over. Chances are the market needs some time to like rest and recover. We're going to get a gap up tomorrow. We'll see if that's sold off into. So a good, whether you play it or not, just a good test for the market. Set an alert at the lows, see if they get violated. TAN solar ETF gap down today. That should be just a normal gap. I did get stopped out of my NXT position, unfortunately. We did close under the 20-day moving average. Still lower volume overall on this pullback. And like I said, coming out of a stage one base, like you tend to see a lot of volatility. I think this is still kind of coming out of stage one base, but less confident since I was just stopped out of my position in one of the leaders. And then ITB, because FOMC meeting came out and said they're not cutting rates. Obviously, home builders had a rough time, lost the 5 to 10, bounced at the 20-day moving average. But maybe this is a higher low on bad news that we're not cutting rates, and we get supported at the 20-day EMA, and then this base just gets higher low and a more quality look to it. So jumping into the long setups, I have them all here. So first is SEZL. This and Dave, DAVE, continue to remind me of each other. They trade very similar, a little bit on the thinner side, but monster stocks. We can see Dave was on the watch list the last 2 days. We got a nice gap up or tight action on Monday, gap up on Tuesday, but squatted. We took out this resistance gap with another gap up today. Uh, this was up, what was it, 9% today. So kind of a similar setup. We bounced, undercut the 50-day moving average, rallied up, put in a higher low, and then we had good action today with a little gap up. I doubt that we're going to see a gap down in the market, but if we see any kind of quick sell off in the morning, that gap zone versus the 50-day moving average and yesterday's low is the spot that I'll be trying to play it against. You could buy it on strength through highs. I don't like that. For myself, it's a little bit harder to like hold the position if I don't get it on an undercut. So just watching that spot. SYM, earnings around the corner here, but really, really big, like double bottom multi-year base here. Right near highs, good action after yesterday's shakeout on lower volume. Got through the 5 and the 10-day moving average. We do have this resistance gap. So with this, I'm looking for a gap up, opening range break. And then I would be playing that versus today's low. So I wouldn't want the position to go from green to red. That would stop me out. But this is a name that has a lot of powerful bars. It can make these like ignite bars, 13%, 6% moves. So we'll see if the market really ramps up on the Microsoft and Meta good earnings. If we go just completely risk on, completely FOMO, through this high is playable for an ignite bar, kind of like a day trade, 1 to 2 day trade. SMR, exactly the same idea behind it. Tight action today, liquid leader. The real buy point was in that support gap below the 20-day moving average. Since then, we had a good shakeout to the 10-day. Now we're getting tight action after we touched off the 10-day yesterday. Gap up, opening range break, buyable versus today's low, the 10-day moving average for SMR. Reddit is trading right at this pivot after hours on earnings. So slight gap up on earnings, big kind of base has shown relative weakness overall. But if this can get going, if the market stays risk on and we don't get those reversals tomorrow, who knows what will happen. But we do have kind of an earnings pivot that Leif Sereda talks about tomorrow with a stock that has proven when it does get going, it tends to trend really well. So we'll keep an eye on that pivot at like 152. Robinhood, same thing, earnings pivot. We have got the couple of days high, 107.50 area. This has been the liquid leader in the market for multiple months now, multiple years actually. 2024, 2025 just continues to act incredible. So through that 107.50 pivot is buyable for me. Dash, a little bit close to earnings, little pullback to the 10-day moving average gap zone from today is buyable versus the low of the pullback and the 20-day moving average. This is a name I don't ever use the product, so I struggle to really see the value in it, but I can't argue with price. It continues to just rocket higher, so we'll watch that 10-day moving average and gap zone. LEW, energy stock that was should have been bought today by me. First test of the 20-day moving average and support gap, undercut. Did so on the gap down, which is a little bit harder to trade at those spots. So I'll just watch for another test of that area as a potential buy spot versus the low of the pullback. PSIX, I had this on the short watch list, and I really thought this was a short, but then we got the action on Monday where we took out the previous day's low, took out the 10-day moving average, and then immediately bounced at the support gap low, showing that there is a bid. Institutions want the stock, supporting the action here. Now we got two tight bars into that like 10-day, 5-day area. Playing this on strength through today's high is buyable versus today's low is your stop. On weakness, a quick pullback into that support gap area would be buyable versus the low of the 22nd and the 20-day EMA there. RGTI, I did get stopped out of this on yesterday as we lost the 10-day moving average. I still have this on my radar strictly because of what SMCI did. So SMCI in 2023 had this massive move, not as massive as RGTI's initial rally, but did rally from $5 up to $34, split adjusted. Traded sideways for multiple months, got that initial move up on a couple ignite bars, up 9%, up 7%, right near highs, and then had a pullback that felt a little bit more aggressive than it should have been, where we lost the 5 day, then we lost the 20 day, gapped up, looked like it was going to get going, and then came back into the 20-day EMA. And then we gapped up, and I mean, you know what SMCI did, went from 34 to 120, so basically a 4x um, in just a couple weeks. And I'm not saying RGTI will do that, but what I'm saying is when you have these quality bases in a name that has already showed you that it has the ability to make massive moves, you don't want to take it off your radar just because it has like one or two ugly days on the pullback. Like this still hasn't lost the gap up low at this point. We've had some relative weakness. We've pulled back. We've had a couple ugly closes, and this basically should have shaken everyone out. So if we get a gap up, that's Bible versus today's low. It's going to be a nice tight risk. And if you buy on the gap up after the shakeout, anyone who waits for like a higher low to be put in is going to be buying higher and going to be adding fuel to the move where the best risk reward spot is probably on a gap up versus today's low tomorrow. If the market's going to continue and really just go risk on and ramp up, this is going to be the best like risk reward spot for the setup. And the base is too quality for me to miss out on that. So that's going to be one of my main focuses, probably with Hood as my secondary main focus tomorrow. FUTU, China theme, which I mean, if we look at KWeb, was a little bit weaker. We've basically given up most of the move here. Two Chinese names that are still like on my radar are FUTU and TME. I still have a position in FUTU, bought it on this Ignite bar low at 130. So I want to give it enough room to actually wiggle, to go through a pullback, first test of the 20-day moving average. Uh, just trying to stay not stubborn with this, but I want to give this room to pull back. It's done so on very little volume overall compared to the up volume days. So this undercut and reclaim of the 20-day EMA and support gap is going to be an ad spot for me. And then I would just play that versus whatever the low of the day is before the recapture of the support gap low. And then TME, another leader in China. Zooming out, you can see it's like already made a massive move from 3 to 21, gapped up on earnings, and hasn't tested the 20-day moving average yet. So we're just looking for the first test of the 20-day, kind of a breakout retest as well at 2075 as a potential entry, and then use a 2 or 3% stop there. Going to the short setups, didn't find a bunch of quality short setups, which is probably good for the long side. We'll go back to APP. I really thought this was going to get going yesterday, but we gapped up. Looked like we were going to take out this pivot and run. Instead, we took out the pivot and then sold off on a little uptick in volume. Today, lower highs, lower lows. We'll see if we follow through to the downside and lose the 20-day EMA. I think that's probably a good short going into earnings. I think they report next week. Yeah, August 6th. AFRM, another name that is not really going anywhere, kind of wicky, looking for a breakthrough today's low, the 20-day EMA as a potential short. I would use probably like a 2 or 3% stop there, not give it all the way to the daily high. QUBT on the flip side, I think RGTI is a quality setup on the long side in quantum. I think IONQ could go either way, and then I think QUBT is basically done here unless RGTI has a massive breakout. Um, this could be like a double bottom shakeout. I just see a lot of weakness here. We had a nice pivot, and then we lost the 5, the 10, the 20 day on the same day. We followed through the downside, got tight for a couple days, and then started to waterfall even further down. Not a good look. This I'm just looking for like a gap up, uppercut, and fail at the 5-day moving average and resistance gap to try to get some on versus the 50-day moving average. CAR, this had been on the short watch list for a while. Eventually, we got the gap down. It took on earnings down 15.3%, reported I think after the close yesterday. Just looking for a mini rally into that gap zone into the 20-day moving average. Might not happen for a couple days, but that would be a spot that I'm watching for kind of a lower high to short. QMCO, this has been the gift that just keeps giving on the short side, was one of those, was like a fake quantum name, even though quantum's in their name, and just never rallied, like showed you that it's not a quality quantum company if that exists. And now it's lost the last support gap in this entire structure, and now this can fall apart very, very quickly, especially if we do get reversals off the gap up tomorrow and momentum leaves the market more. This can fall apart very quickly. So just through today's low is the short there. GRRR, this has been on the short watch list for a while. We saw the resistance gap stack up. We saw the tight price action of the 20-day. That was really the A plus short at 2016. Now it's starting to accelerate to the downside. So this would be just to play for like a 1 or 2 day waterfall, kind of the reverse of the SMR performance booster to the upside. Um, but this looks like it's kind of done. Maybe it can hold at the 200-day, and then we build out like a very long base, but that'll take some time. ZEPP, potentially putting in a lower high here. Good risk reward off the 10-day moving average if you wanted to play that to the upside. But then we got the reversal yesterday. We tried to rally this morning, eventually closing lower, down 4.5%. If we lose today's low, lose the 10-day moving average, that would be a short. And then I would try to cover like down into this gap zone. NKTR, gap up, flag, and now it looks like it's starting to accelerate to the downside. Through today's low is the short there. The high would be the stop on that short. NEGG, gap down today after like another new high, but what you don't want to see after a move like yesterday is exactly what we got today. Because this was a quality chart. I know, like I was short this name. We had a resistance gap through this area, and I was short the name because we saw like two gap downs. Here, let me redraw them. So we saw a gap down, we saw a second gap down. We uppercut and failed at the resistance gap. So that was where I got short. And it looked like it was going to accelerate down here, but then we rallied, got really tight for 1 day. And then I said, well, this is a do or die spot. If it breaks the low, you could short. If it breaks the high, I covered. You could have gone long. Unfortunately, I didn't go long. I just covered my short. But then we had this awesome 3 day move into new highs, just barely after the previous high, just barely into new highs. And then we gapped down on a day where a lot of kind of the risky stuff was actually making some nice moves. I'm not saying that this is completely toast, but what we don't want to see on the short, well, what I want to see if I'm going to short this is another gap down opening range break, and then I would just play that versus like 50 as my stop. Um, a secondary spot, uppercut and fail at the gap high at 56 is a potential short. But I like this name has a bunch of accumulation bars. So I don't want to really take this on an uppercut and failure because it can uppercut and then just rip higher. I want to take this on weakness and really only press my luck if we see immediate action to the downside. If this like gaps up and then like continues on, I think it can make another massive move. It's doing the only thing wrong in this chart was today's action where we gap down after a new high. So if we immediately gap up and take this out, I think anyone who's short would be forced to cover, and we could see an epic squeeze to the upside, gap down, and then we have got two evidence that this was the kind of shakeout move to the upside before it's done. Then finally, NNNN. I got short this on the uppercut and fail of the resistance gap here. Another lower high. And now it's starting to really break to the downside. I think through today's low is also like an add or an initial short spot because you have like a wick high after so whenever you get a high and then you wick through that and close, it just shows you that right for now at least sellers are using that liquidity spot to sell into. We rally up another lower high, rally up now a resistance gap. You're seeing proof that sellers are stepping in. And now we immediately test the 20-day EMA again after just like 3 or 4 days. Not a good sign for longs, good sign for my short. And we'll see if we can accelerate through this move to the downside. So that's the daily market recap for Wednesday, July 30th. Apologies for not getting the video out yesterday. That won't happen again. But hope you guys enjoy the rest of your night, and I'll see you guys tomorrow.